we are about to begin the second part of our program, which is the panel discussion on COVID, emerging from COVID, challenges and solutions. The master of ceremonies for this part is Amartya Lahiri, who's seated on the left. So I will hand it over to you to give further introductions.
It's an honor to be over here with a very distinguished panel. Let me just start with immediately to my right, and needs no introductions. For Pranab Sen, he was clearly the very well known ex-chairman of the Statistical Commission of India. Many other hats. Right now, I guess I heard you just took over as something to do with ISI.
Yeah, chairman.
Good luck with that. We have Yamini Iyer. She's the president and CEO of CPR, which is also very well known. So she also wears many hats. And then, of course, Viral Acharya to the far right. He's a CV Star professor of economics in the Stern School of Business at NYU and was ex-deputy governor at the Reserve Bank of India. So I guess this is a wide sweep of things because, the topic as was put out was talking about India very broadly in terms of the challenges it's facing going forward, given what we've come out of or we are still coming out of. So it's a broad range of things. But let me just start by saying that, the things that we worry about mostly as economists and as practitioners and as analysts and policymakers, for a country, there are three sorts of things. So the first is the macro stuff that is a lot of concern to a lot of people, which is all about growth, about inflation, how to sustain growth, how to control inflation, and what are the drivers of all of those. Are there policy, what are the policy handles that we have to address those? And then there is the micro, which is in the previous talk that Devraj gave, it was all about personal. So what's going on income inequality, where are the jobs coming from? Are we creating enough good jobs that people can aspire towards? Are standard measures of human welfare, how are those, evolving over time? So those are all, co-determinants in some sense. I mean, these two things kind of move in parallel, but they intersect. And that's, so we're going to try and talk about all of that. We're not going to go with, prepared scripts that people are going to talk through. I'm just going to have a very freewheeling chat and just throw things out and maybe call upon one of you to start off on the topic, but then the others should feel free to jump in. So I guess I'll start with the macro stuff, which is, clearly this is the post-COVID recovery has been proceeding in a kind of very stuttering way that every time we seem like we're about to move forward, something kind of hits us again. So lots of issues, lots of headwinds, so to speak, some around advanced economies, about what's going on over there in terms of, how inflation is moving there and how they're responding to it, which in turn implies that things are going to happen to, as the policy over there gets tighter, monetary policy, it might impact recessionary fears are growing, which has implications for emerging economies. On top of that, of course, the Ukraine war and all the associated supply side problems, associated with that. Now, on top of that, we also have the China uncertainty because there were all these lockdowns, but now we are potentially, there is this risk of China going through a bit of an Armageddon in the short run as COVID seems to be taking off. So that's the other issue. So let me just start with maybe with Pranab Sen to start with that. Where do you see these, at least in the short and the medium run, India's growth and inflation, how it's going to get impacted by what's happening in the advanced economies in the next? Is it going to be something that's going to be a major issue hitting us?
Well, that depends on what you mean by a major issue. Of course, it will be an issue. But, a lot of these things are very comparative. And as our government repeatedly says, we are the fastest growing economy in the world and will probably stay that way. Not because we'll be doing great, but because the rest of the world is going to be doing a lot worse. But in an absolute sense, if you really go back to the discourse that we've had for years now, there's more or less, I think, an agreement across the board in India that given the challenges that we face as a country, we really cannot settle for growth rates less than 7 to 8%. Right? That looks virtually impossible now. So we'll probably grow somewhere around the 5% range, which by our historical standards doesn't sound that terribly bad, but it's certainly not up to what we need as a country. Now, that, of course, has collateral implications. So far as inflation is concerned, I think inflation is already under control. And I don't think there is anything inherent in the Indian inflation story today, which the RBI really cannot manage. It's very much within the scope. In fact, my personal opinion, they've done all that's needed to be done on the interest rate front. Now they have to, I think, just tweak a little bit on the yield curve and nothing more than that. But the real issue, I think, comes to what you referred to as the micro, which is that has the entire COVID and lockdown and that whole process of 2.5 years, has that left a permanent effect on our economy so that people like me, who are sort of professional macroeconomists, most of what we believed about the Indian economy may actually no longer apply, and we may have to rethink the way we think about the country. That is, I think, the discussion we will need to have, because I think some of those issues are stark and the implications are serious.
So let me actually bring Viral in on this. So one of the things about the post-COVID recovery is the fact that it seems like there's a lot of indebtedness everywhere because the fiscal space has been used up by countries all around, and due to stress, I think the debt levels have gone up both at the household level and at the national level. But this is also when, I mean, because the recovery was starting, credit growth in India has picked up a lot. Now, having, a clear, one of the concerns that, that people often have when, you have sharp credit growth is, how is the banking system going to respond? Are we as long as credit's not growing very much, you keep hearing that Indian banks have kind of recovered, the NPAs are under control, things are okay. But once you start seeing credit growth picking up very sharply, is this something that we should be worried about a potential revisiting of all the banking sector problems that we had, particularly given that rates are likely to be going up?
Yeah, so historically, whenever we've had like 20% plus kind of credit growth numbers, usually, the banking ship has started wobbling. But I think there is a distinction, between the credit growth of, say, the post-global financial crisis, when it was credit growth for large industrial companies. In contrast, from whatever numbers I'm seeing publicly, the recent credit growth is more driven by credit growth for households, and housing credit is picking up. I don't think there is very strong sign of the capital expenditure cycle yet actually taking hold, even though maybe there are some positive signs here and there with, global companies wanting to come in and set up manufacturing hubs with our companies, and maybe that will create some capex growth. I think the concern I have there is that I'm not sure if the household overall net worth situation is doing great. In the following sense, which is that, as you rightly pointed out, we didn't go down the path of giving a lot of debt, either nationally or to individuals. If anything, we gave debt moratoria and sort of did a few relief measures. And some of it paid off, in my view, at least temporarily. But a lot of it was just sort of liquidity going into financial assets. And the thing that worries me the most about India is a complete discord between what's happening in the stock market and what I think is an objective sense of what's happening to the real economy on ground. And I think this is probably a sign that, one, there is a lot of wealth that's been created right at the top, at the very high net worth. I think that invariably finds its way back into the stock market in some way. But I think when you go a little bit further down and you think about savings coming down, their indebtedness rising, real wages not actually rising at the same pace, I worry a little bit whether this credit growth we are seeing right now is going to be a bit difficult, in the sense that if, as Dr. Sen mentioned, if we really grow only at 5% or something like that, will we be building up household net worth at a level that's robust enough to support that credit growth? I'm a little bit less worried about banks this time, because they are not in as perhaps bad a shape as they were when the global financial crisis loans were made, because there's some disagreement, but my sense is that India had been rolling over bad loans even from 90s and 2000s, and every time there was some interest rate cycle that was creating the right structure for rolling over the bank debts easily. And then that kind of all came to a halt in 2012-13, because the debts to roll over were just very large. I think I'm less worried about banks this time. Clearly, some have more NPAs than others. I think I'm a little bit more worried about what it means for our consumption, and I'll tie it back to your main point, which is that I'm a bit worried that this indebtedness of the households can lead to a retrenchment of their consumption powers, and that the consumption power is just becoming more and more lopsided in the economy. I think the wealthy are consuming a lot. You can see it in our import bill. And I think that has a macro implication, which is that even when we are growing well, we seem to be growing well by increasing our trade imbalance. We are importing a lot of luxury goods, phones, etc. And I think that can come to a headwind with the global macroeconomic scenario. And I think, since you mentioned inflation and the interest rates, etc., my sense is that I may be sort of a little bit counterpointing Dr. Sen here. My sense is RBI may have a little bit more to go, because I think if the Indian inflation is not brought down a bit further, more decisively, then I think the real returns coming from India are not going to look that attractive to foreign investors. And I think if our current account deficit keeps rising, if growth slows down, there could be an impact on fiscal deficit, even though tax collections this year look better. I think my sense is that could be an external sector issue. And even though that's not directly the RBI mandate while setting the interest rate policy, I think through inflation, it does sort of feed back. So maybe it's a very long-winded answer to the question you had, but to come back to your question, I think that we have to watch out on household credit growth. Is it happening in the segment where net worth is rising, or is it happening in the segment where perhaps savings are coming down and yet they are becoming more indebted? If yes, then the next cycle of low growth could be quite painful to making consumption even more lopsided. And besides, of course, the political implications of having lopsided consumption, I think in case of India, it also has external sector implications, because our trade imbalance always goes for it. So just one last point. Every time I was in the office at Reserve Bank, I felt that whenever we tried to grow fast, our imports just started shooting up. And to me, that's a sign that of late, our growth is not with very balanced consumption across different segments of the society by wealth. I think of late, our growth has been more lopsided towards consumption of the wealthy. perhaps there's some policy mix, maybe formalization is going to start with support the wealthy. But it's just something to think about.
Actually, it's let me bring in Yamini here. So I think part of Viral's answer and a lot of people's concerns is it does seem to have a danger that this is becoming an even more dualistic kind of society with some people doing really well and some people, progressively. I'm not saying in an absolute sense they're doing worse, but the gaps potentially maybe getting worse. Now, COVID's impact on all of this is, I think, just in terms of the facts, and there is, people have been talking about, symposia have been conducted on what has happened to poverty. Has it gone up? Has it not? And then there are views on either side. Do you sort of want to take a couple of minutes to just give us what your perspective is on, has it widened? Inequality has widened? Has poverty gone up? And is this seems like a temporary retrenchment, or do you think the signs are that this is, potentially maybe long term?
Thanks, Amartya. It's difficult to answer this question on fact because we don't have any data. And I think that that's something that especially this community needs to repeat again and again and again. The fact that COVID 2020 is when we should have been collecting census data. We're now in 2020, actually we're almost in 2023, and there's no sign that census is going to happen. The fact that we are still relying on 2011 NSS consumption expenditure surveys, but for some leaks, that apparently something is out in the field, but we don't know whether that will be in the public domain or not. So it's your estimations versus mine, it's your biases versus mine, makes this a very difficult conversation to have. And for a country like India, whose statistical system was a matter of global pride, the fact that we have to have this conversation by starting off saying, I don't know, in all honesty, is a really serious problem. What makes it even more problematic is that COVID didn't come against the backdrop of a growing economy or even an economy that was in steady state. We know that there were two significant shocks to the economy in advance of COVID. Demonetization, which may have had a delayed effect on the informal economy, but had an effect, no doubt. GST, which had an effect, again, perhaps slightly delayed, but had an effect, no doubt, on the informal economy, and particularly on small and medium enterprises. And then you had the shutdown of the economy in March of 2020. All we know is that these three shocks led to the last quarter of the GDP growth pre-COVID saw a significant slowdown. So logic would say that things weren't particularly comfortable, and logic will tell you that things got worse because this is largely an informal economy. The switch of the economy was put off. We saw vast majority of workers that came from rural areas into urban areas go back home. We know from PLFS data, the Periodic Labor Force Survey data, which is at least some data that gives us an indication that even before the shutdown of 2020, agriculture was the largest sector of the economy that produced jobs. We know that means that it was more likely than not distress employment, subsistence employment. And CMI data will tell us that consistently over these last 3 years, employment levels have only on occasion gone up to pre-COVID levels. And those weren't particularly good employment numbers anyway, because labor force participation rates had started dropping. So taking all of this together, I think it would be fair to say, oh, and there's one more data point, which is FMCG sales, that again tell you repeatedly, you're not seeing the same amount of volume growth over consistent cycles. So if I put all of this together, I think it would be fair to say, with my biases and absence of data, that certainly inequality has risen. And I think there are two other things to consider. So we know that, or at least World Bank data told us that about 40% of India fit within what they call the vulnerable population back from 2011. So one income shock away from falling back into poverty. We know that the entire health system, but for COVID-related action, came to a standstill for the better part of a year and a half to 2 years. We know from some of health data that things like immunization for measles, TB, all regular routine and critical health services all came to a standstill. So I think it would be fair to assume that more households than earlier went through significant health shocks. We know anecdotally, even from everybody sitting in this room, we'll all have stories of health shocks that required unexpected expenditure in this phase. It's pretty clear that that perhaps had a huge impact on incomes of households. We also know from, I think, the ASAR survey, which we're all eagerly awaiting, will tell us a little bit more of what happened this year. But we do know from last year's ASAR survey that there was a move of students who were going to private schools in re-enrolling into government schools. And the wealth indicators that ASAR used seem to suggest that a large number of those households were households that were relatively wealthier, that were moving back into government schools. Again, an indicator of significant distress. So again, you put all of this together, it seems to me that it would be fair to say, I don't know if poverty has increased or not, but certainly inequality has likely widened in this phase. And therefore, we should all again very loudly say, can we please have some data so we can have a serious conversation about this?
Okay, perfect. Actually, this is going to sound, since you brought up agriculture, I'll come back to health and education in just a bit. And this, I just want to throw it out to all three of you. There's a very old idea amongst economists and others that times of crisis may be times for, a good time to, focus the mind and get things done that otherwise may not, have happened. So we've talked about agriculture, and Indian agriculture it's not an exception. It's true amongst, in developing countries in general, that too many people sit here producing very little at very low productivity levels. So productivity levels are very low. And so in some sense, what one would want is to get these people off the land into something else. Now, at a point where there is clearly likely lots of distress in that sector, could it have been, potentially create the push factor that may be required to get people off the ground? And if not, what is the impediment to that? What do you think?
Look, let's be very clear about one thing. The most striking feature, and Yamini should have been, I think, a little more forceful when she said it. The most striking feature of what's been happening since 2017 is that for the first time in 30 years, the number of workers in agriculture has gone up. We saw 30 years of sequential decline of the number of people engaged in agriculture. It's gone up now, and it's not gone up by a small amount. It's gone up by nearly 50 million people, which is not a joke, right? But let me just touch a little bit on the data part of it. Yamini, I have bad news for you, okay? 2011-12 NSS is based on 2001 census, right? We do not to date have any real NSS report based on 2011 census.
That is true.
So we are working on 2001 data. And by the time the 2004 or 5 census comes about, we'll be 30 years.
But isn't there an employment survey, unemployment survey?
PLFS, yes.
The PLFS is based on 2011.
2011.
Yeah.
So we do have that.
Yeah, we do have that. But on the household consumption expenditure, the distributional aspect, we are 2001. Now, the point is that the damage that is happening in the data system is important. It's not just the census. The economic census hasn't been conducted. So the data that you are getting from the surveys on enterprises is again on a very, very outdated frame. I'm not sure it's representative. And here we have a situation where if you think about the kind of damage that the two of them were talking about, this damage is really to the stock of things, whether it's the stock of assets or the stock of companies. If stock damage has happened, we are not going to be picking up the stock damage. We'll only pick up the flow implications of that. And the flow implications are usually much less than the stock, because those who have survived will fill up a little bit of that gap that was created, right? So we may actually be underestimating the amount of damage that's happening based on current data.
I see. So, Viral, you want to sort of say on just this agriculture issue, is there any hope of, where is the problem? Why don't people get off the land? Is it because there's nothing else to do, no other sectors expanding, or the attraction of being here is like it's a trap?
So I think in some sense our food security has improved quite a lot, and I think it is one contributor to this creation of agriculture jobs. But I think it has happened through a very large number of implicit or explicit subsidies. There is power, there is water, there is fertilizers, all kinds of. So I think our agriculture is likely to be bloated also for that reason. One could just be the fact that because jobs are not getting created, people are going back, and maybe that's the only thing available. But it could also be that we are artificially keeping its costs of inputs down through a whole range of these subsidies. And of course, many of these are very large implications. Some of these have implications for, discom losses in the power sector. I think that's one important contributor. So, of course, somewhere it has to show up in the fiscal bill that you are subsidizing this activity to be very large. I think it has some other grave implications. I'm told in Punjab, where, you switch from wheat to paddy, we are now digging so deep that it's not even necessarily good for the crops that we are producing out of there, besides sort of all kinds of other issues related to that. So I don't know, with all these subsidies, it's a little bit like a genie out of the bottle. It's always hard to wean the system off that, because you take the subsidy off, then you have to. That's going to raise the cost of inputs here. So on the one hand, that could cause inflation through the product side. Or it could be that maybe we have to move some of the labor force into somewhere else, but then are we, doing something to produce that migration? That requires human development, skilling, and some plan to absorb this workforce into somewhere else. So I don't have a very clear answer, but I know that there is a very whole range of subsidies which are out there to this sector. If I was to have a go at it, I would say, let's wean the system of these subsidies. Maybe agriculture will shrink a little bit. Maybe the urban consumer will have to pay a little bit more for the food. Maybe that's an inflation pressure that we have to manage in some way. But then we need simultaneously a plan to absorb that workforce into something else. Clearly, it's going to be hard to absorb, I think, the old who are in that workforce into something else, because that's a much bigger skilling effort. But what about the young there who are entering that workforce? Maybe there's a way to skill them, give them vocational training, and absorb them in some way into where we are actually creating jobs on the side. And maybe if there's time, I can talk a little bit about that later, which is that I think there is something positive happening in the economy in the tech sector, but it's hitting its limits sort of very, very soon in terms of the labor force. And you can see it in the wage inflation in the IT space and all. And I always think maybe it's too much of a utopian thing, but that there must be a way of preventing the youth in the villages from going into the agri sector and finding a way of getting them some way straight into the IT sector, because we are actually creating jobs there. The world is demanding services from us, but somehow we are not growing that workforce at a very, very fast pace. Like I just did a survey last December when I was in India of my friends who are in IT. And the wage inflation in IT is anything from 10 to 35%, depending on what level of job you are looking at. Which is basically saying we are hitting the limits of the available skilled workforce very, very quickly when our IT sector grows. Now, clearly, it means we have something to, given our labor workforce, we have something to expand there. But this requires, of course, investments in human development, investments in skilling, investments in education. And of course, simultaneously, we have to make it sort of incentive compatible for those folks to leave agriculture as well. And therefore, I think both of these transitions have to happen at the same time. But maybe we can
Actually,
talk a bit more about
about skilling. So let me, yeah.
I think the important point is the one I wasn't as forceful about. It was slow, but there was a movement. It was moving in this direction, and now it's moving in that direction. So maybe we need a different starting point. Maybe the different starting point is, why is it moving in this direction? And because it's reversing, what is the impact that is likely to have on household willingness to give up on the 1 acre land that they have? It's the only subsistence, right? Like, even in the end, you saw a large number of workers that came into cities going back home. Part of the reason why they went back home is because that is the only source of subsistence, right? It's the only safety net. So what is the sociological impact of this reversal on willingness of families and households to make the kinds of choices and take the kinds of risks you need them to take in order to reverse the reversal and start moving forward, is a question that I don't think we've asked enough. But we should, because if I were to put myself in the place of that precarious worker who moves from farm off farm into what are precarious jobs. So, we know that the large amount of job creation that took place off farm, even in the peak growth years, took place largely in construction. These are precarious, informal jobs. We don't have robust safety nets, particularly outside of rural India. So there is precariety, and that means that you know that there's always a chance that you move back. What does that do to the kinds of choices that you make, the kinds of risk-taking appetite you have, the kinds of investment choices you make in at the household level in education, because a lot of this is private education? I think it's worth just asking some of these questions with a fresh perspective, because we are no longer in this trajectory. We suddenly started moving back. I don't know that there's any other country in the world that has necessarily started moving forward and then moved back consistently now for 3 years.
Yeah, and in fact, one more dimension, something else has reversed, which is, for the longest time, we've been talking about feminization of agriculture.
Yeah.
Okay, you've got de-feminization of agriculture happening now, and this is all post-COVID. Okay, it's a part and parcel of the same story, which is that the non-farm rural sector, which is absorbing the rural youth, has stopped doing so.
So let me come to that.
That is the question we need to go to.
Yeah.
It's not you push people off the farm, you provide them with alternative opportunities. Now, those opportunities did exist and were being created. They stopped happening. So people are being forced back onto the farm. They're not doing out of choice, they're doing out of compulsion.
So if I could just add one thing there, Amartya, which is one data point we didn't mention was, of course, also the numbers we see in the Narega scheme, which is also revealing that they are going back and they would rather take the rural employment, quote unquote, employment offered by the government.
It's been consistent.
So is there, let me, since, this reverse movement, and let's actually go back before the reverse movement started. So this expansion or movement of people out from, rural labor into peri-urban, urban, at least the anecdotal, suggestions seem to be that it was mostly being absorbed by this informal service sector, which was the big attractor of all of this. Now, that grows around other service sector and maybe some high-paying manufacturing jobs that create more of the service sector. Is there any scenario where you can think an economy that is pushing out 10 million people a year as fresh additions, as well as the stock that is sitting there, can actually create jobs at that scale through purely service sector? Even if that wage inflation didn't happen in the high tech fringe of that service sector, could it create even spillovers absent them becoming less competitive over time? Could it create enough jobs through this multiplier and spillover effect to absorb labor at the scale that we have it? Because there's always this chatter that maybe manufacturing is over, there's no reason to worry about it. There's no reason to think about it because it just can't do anything. But service sector, can it be a palliative at all?
So I don't know the clear answer to that, but I think what is positive in the Indian economy, as I see it now, is that we do have a very solid plumbing for a digitally organized economy. maybe perhaps one of the best in the world, in my view, when you compare it to elsewhere. The Aadhaar, the UID authentications, the UPI, then now, the India stack and whatever else can be done on top of that. I think there's a lot of entrepreneurship on the ground, and I think it has shifted from just being the service center for the rest of the world to now actually developing apps for the Indian consumer. We are actually creating a sharing economy, e-commerce economy for the Indian consumer. I think there must be a potential to create service jobs, in my view, even in the rural areas, by leveraging up this digital economy as much as possible. Now, what does it mean? Is it really sort of delivery services? Maybe it is all kinds of financial investment advisory services. Maybe it is good old banking, but maybe it gets done through the phone. And maybe we will need people who advise folks on how to get onto digital banking. And, there can be services of this type. You could, like, clearly a mutual fund industry has done wonderfully in second and third tier cities in getting savings financialized. Maybe some of that has to happen now all the way down in the rural economy as well. So I do think the service economy has potential, and I think it's bound to happen. I think my sense is, because the barriers to entry in our digital economy right now are so low, and perhaps they are the lowest compared to many other parts of the world, because, I think banks are sort of getting bypassed a little bit because they have not upgraded themselves very well, and the new operators are figuring out how to provide services better than banks are providing. So I do think it's a potential that needs to be tapped into. Is it good enough? I don't know. One thing that gives me a pause on whether service economy will suffice is because there's just one coincidence in this data point Yamini mentioned about the 15, 16, 17, when we started reversing these trends, which is that I think that was about the time I think the Indian housing market collapsed. And I conjecture that was a pretty important event for shifting of labor back into the rural areas. I think housing markets have huge multiplier effects. Once you create homes, you need other things. That creates then jobs for those other things. And clearly, I think the rural workers coming into the urban areas, the urbanization that was taking place as a result of that housing, I think it definitely slowed down. I think workers definitely went back. It's just coincidence. I don't know if anyone has done a causal analysis of this. But that seems to suggest that maybe we need to find ways of reviving some of these markets in a robust way. I thought one good thing that happened in the COVID-19 response was, finally, I think when we were at Reserve Bank, we had a lot of reports that we had shown state government, central government on just reducing the stamp duties. The level of, in some, I think in Gujarat, it was like down to 2% the total taxation, but in some states it was as high as 10 to 12% once you put the entire body of taxes together. And I think a lot of that, some rationalization took place of those stamp duties and so on. There might be some other ways to get it off the ground. Of course, I think in Mumbai, at least where I know the housing market a little better, cash is back with vengeance.
Yes.
I think 50% of everything happening is happening in cash in Mumbai again. Maybe that's what it takes to have a thriving housing market in India. But anyway, I just wanted to put that on the table, which is that besides the service economy, maybe housing, and if manufacturing comes through these global giants partnering up with our firms, maybe that also creates some jobs back into the urbanized land for the rural workers.
Yeah, but let me just ask you a question, because this is intriguing. You talked about reducing the stamp duty, right? As it is, the urban local bodies, the municipalities, the only real source of revenue they have is stamp duties, right? And the states have been extremely, extremely tight-pursed. with their local bodies,
Yeah.
right? Now, you on the one hand say, for the good of the nation, reduce your tax rates, but we're not going to compensate you for that. That's asking a bit too much.
So actually, let me bring
So
you in.
I guess what you're saying is you would require that
You
this
pay
is
no, this is
a contract with the
something
states.
finance
And
committee at the
yeah,
central
exactly.
level.
Yeah. Yes.
And figure it out, saying that if you reduce your stamp duty, we'll make it up.
Yes.
There must be a compensation element.
So, Yamini, let me ask you, on a related issue of one of the things that we saw during the peak COVID, there's been a gradual trend in India that, at least in urban India, of public services getting privatized. And that's been it's almost like, gated communities sort of producing everything inside, and reliance on the state has kind of gone, you minimize it, whether it's, pretty much a lot of aspects of day-to-day living has been privatized, which traditionally would be public. Now, the two big things there are education and health, which is clearly, some things that are about as basic a human, indicator of human quality. Now, during the peak pandemic, one of the things that came forth was, infrastructure of these two things is never built at scale. So, the health infrastructure, even in urban areas, kind of broke down. They just couldn't cope. But rural India, I think, has been existing in that space for the longest time. So is this something that there is, because one is talking about permanent damage, due to COVID, and, whether it's skilling, which is all about education, and then about, are people getting indebted in just trying to maintain their health levels? Is the situation completely dire, or is there any awareness of, this needs to be done? Are we doing something about this, about just expenditure, government expenditure, the distribution of, or there is no movement?
Well, we closed schools for 2 years.
Yeah.
As a parent of 2 primary school going children, I can't tell you what a pain that was, both for all the trauma within the household and for all the learning loss. And the socio-economic, emotional impacts of all of that in the household. So I experienced it. I know that most children across the country and most households across the country experienced it too. It took a lot to get schools to be open. We were probably, so I think Uganda closed schools for about 83 weeks. And I found a group of parents that was sort of keen to mobilize reopening of schools. So we tried a little bit. And I think the only thing that moved the needle was when we said, but we are even going to beat Uganda. And at that point, everyone said, okay, maybe we should think about this. The loss to what we have done to children, and let's not even talk about higher education because that's a whole other, even more depressing story, is significant. What puzzled me about it is that through this period, there was very little public mobilization on education. But the silver lining is that beyond what we see, quietly, lots of things happened which could possibly be leveraged. Again, we learned from the first Asar that for the first year, or at least certainly for the first 6 months after the initial confusion about school closures went past, there was a lot more parental engagement in what was happening inside the classroom, in the sense that worksheets were being sent to parents' WhatsApps. There were some places where teachers tried to reach households, reach students in the homes. So it's sort of, there's always been a third actor in a schooling system that we don't talk about enough in the Indian structure, which is the parent. And largely the parents have been kept outside. It's been between the school system and the student. The parent makes choices, private versus public, but that's it. And now for the first time, the classroom came alive for the parent. I think that opened a huge opportunity to leverage the traditional accountability structure of what makes public systems work. That we've not done it is a separate issue, but at least there was an opportunity that opened up. There's still time. The second important thing that happened is some states, I spent a lot of time in government schools in Delhi, and I know some things have happened in other states too, but I'll speak to the one I've seen the most. The biggest challenge inside the classroom in the Indian context is what I've often called the classroom consensus, in that parents, teachers, and the ecosystem all believe that the core purpose of the classroom is to maximize, complete the syllabus and maximize pass percentages, get the kid to pass the exam. So when you talk about learning levels inside the classroom, the challenge of teaching, teachers often will argue that that's not the goal of the classroom in some senses. There are many reasons why the teachers are not being able to teach, but they don't get into a conversation about the nature of the pedagogy, the curriculum, and the fact that the vast majority of students fell back in class 1, and so in class 8, they're going to stay as far back as they were in class 1, so the teacher only focuses on the first 2 rows. When COVID happened, school was closed. Nobody can be blamed for the fact that there was learning loss. So once schools opened and the government of Delhi, created a context where the focus was just remedial, let's just get these children up to speed to be able to sit in a classroom and remember recognizing letters, reading, comprehension, basic arithmetic. The entire system aligned. And I have spent a lot of time talking to teachers, but I've never spent so much time talking to teachers in ways where they're speaking what seemed to me to be, music to my ears. They were talking about the last child, what they can teach the last child and how they can bring the child to what the curriculum expects a child to know. I think this is a big shift. How much of this stays in the school system is an open question. It probably has already gone back to syllabus completion. Certainly the private schools where my children go to just assume that it was business as usual, and so that was that. But these experiments have happened, and they may leave kernels of possibilities of change in the education system if we are able to recognize it and leverage them and move quickly. On health, lots of talk about how we don't spend enough on health, lots of talk about the broken health infrastructure. What I found particularly puzzling about the public conversation that we had in March 2020 is actually parts of India have dealt with pandemics and epidemics relatively well through the public system. We managed Zika, we managed Nipah. Without shutting down, instead of drawing on those lessons to say that maybe we can build public trust in the health system and we'll find ways to make it work, we did what the rest of the world did. We shut down, knowing fully well, I don't believe that any single policymaker in India doesn't know that most workers work in precarious conditions and they come to towns and they will be left with nothing if you shut the economy. We did it knowing that, on the argument that the public health system will not be able to cope. We need time for preparedness. Why we don't trust the health system puzzles me enormously. And we managed to do this massive vaccination drive, at least until the boosters, on the back of the foundation that we built through the public system. It was the ASHA worker, the A&M that were braving disease, not one. We did some surveys with frontline workers through this phase. And what was interesting to me is how much struggle it was to get my colleagues at CPR to turn up to work because they were scared of disease, and fair enough. But nobody in the frontline Indian state said, I'm not going to go on a house-to-house awareness drive. They went. They braved what was a very frightening scene to do their duty and do their job. So these are opportunities to say, can we start believing in the possibility of the public health infrastructure? Because until we don't believe in that possibility, we are not going to have the capacity to put money into it. We can keep talking about it, discussing its fiscal implications and so on, but we will not prioritize it if we don't believe it can actually be done. And now we have case study of parts of the system when you believe in it, when you push it, it actually works, it works well. So I think these are the lessons we should remember from it.
Yeah. So actually, let me go back to this. One thing that you kind of briefly brought up, just thinking that Viral, when you were talking about the fact that some of this reverse movement began when the housing market collapsed. So one of the big, public works programs, which are sort of related to infrastructure building. So there's been a lot of talk about infrastructure ramp up, whether it's roads, airports, all kinds of things being talked about. So I guess it brings up two issues. It can potentially be, in as much as this is, I know Devraj talked about what is capital intensive and what is labor intensive, but, construction still continues to be a very labor intensive kind of activity. This kind of focus on infrastructure building going forward, just following the logic of what you said, could potentially be a source of, reversing the reversal, so to speak. But that then raises this other question that we kind of ran into a separate problem, in the previous round of infrastructure ramp up, where effective demand for a lot of this stuff was seemingly missing. We kind of built up a bunch of things, but there was not much effect. I mean, people will consume electricity if it's for free. People will consume a bunch of things if you just give it away. But once you ask them to pay for it, the effective demand is just not there. So now that raises this issue that there could be some, palliative in terms of, this might create jobs, but do we then worry about, are we building things where, or is this the Bugsy Siegel model that build it and they shall come? I mean, this is this notion that somehow infrastructure is this big, it's going to solve everything. I mean, build infrastructure and, capital is going to come flying in from everywhere to chase it. Is that sort of a solution that you can see that?
So I don't know. I think my view is, I think infrastructure, health and education, at least education at the lower level and maybe some basic health coverage. I think these are ways of making transfers in the system from the wealthy to the poor. So I don't think it can be market priced in my view. I don't think infrastructure, health and education is at market price in New York or in Germany or wherever. I think these are the subsidies, these are public goods that we ought to provide at reasonable cost to the system. I think to me, the issue is really one of macro, which is that the government balance sheet is full of so many other revenue expenditures. And therefore, I keep coming back to subsidies to farming, for example, which is that, of course, welfareism has expanded a lot over the last 10 years. It has become more effective. So it has become even more attractive to keep expanding it because it's easy to claim on a billboard that this has actually been delivered to you with effectiveness. But I think that's the real danger. Every time you look at our every budgeting exercise of, whatever, December, January, there is a very small space of maybe 3 to 5% of the total budget where we make adjustments from year to year, because everything else is just a given. You just take it as a fixed set of expenditures year after year. My sense is if we have to go down the path of building infrastructure, health and education provision of a modern economy, I think we have to scale back our welfareism, which is really right now distribution of a lot of private goods, I would say. We need to scale back that, rationalize it, and realize that it's better to provide those three fundamental goods, and then perhaps that will create sort of more sustained livelihood for people on its own, rather than not giving them these things and then looking for ways of actually subsidizing creation of livelihood in the first place, which is then, never, it's like then this genie doesn't go back into the bottle. So I think this is to me also a macro question. I think we are demonstrating, I agree with Yamini, that we are demonstrating micro delivery now. But I think, in my view, we are out of budgets. I think we don't have space in our central and state budgets, which on a year-to-year basis are being freed up enough to say, can we put infrastructure on the table? Can we put better healthcare on the table? Can we put better delivery of education on the table? It's not on the agenda because there's no space. I think we have to create space. I think we have to get rid of a lot of subsidies, which are, maybe they were justified at some point, but maybe they are not justified now because we are not a socialized economy anymore. We have private sector providing many things to our consumers through the businesses. So anyway, I don't know if this is the entire answer, but to me, it is staggering that our budget from year to year is really about a very small percentage of the total expenditure of the government. Yeah, it's always been true. Yeah.
Our assumption used to be about 7%.
Yeah.
And this is in the days.
Yeah.
But let me also point out one thing, and this is important. So you are referring to the phase when we tried to get privatization of infrastructure and it completely collapsed. Factoid. The government had to take back a lot of that infrastructure that had been privatized because those guys just went under. They started to flog it off on the market now. It's taken about 7 to 8 years for the usage of that infrastructure to pick up. Now, those are really commercial propositions. And the government's getting good money for it. Right? So the point is with infrastructure, it's not that you finish the infrastructure, you're going to get the returns from tomorrow. It takes time to build up. If you think about roads, for instance, villages relocate to the roads, but that takes It takes time. It doesn't happen overnight.
So,
So the model, it's not that infrastructure is a sort of perennial sort of bog into which money goes in. It is that it is privatized, but you have to give it time.
yeah, but so this then brings up this question about the optimal infrastructure financing thing. About,
Yeah.
because this is always an issue. Do we have space? Do we not have space? And we went this private-public partnership that clearly blew up. Now we have a slightly different kind of way of we are building hard and soft infrastructure through a few conglomerates. I mean, that seems to be the way it's being done right now. It's a slightly different model. Now, where are they raising the funds from? I think a lot of it is still coming from public sector banks or it's LIC. I mean, it's like a huge amount of funds are going from the public sector yet again towards public infrastructure provision that's being done by just a few. So is it that different from the previous PPP model, or is it?
No, the issue that in infrastructure there are two issues, right? One is who constructs it, and the second is who runs it. And the two do not necessarily have to be the same. And it may, when we're talking about things like superhighways, when we're talking about ports, airports, these can't be run by SMEs. The running has to be big corporations. However, who constructs it is a different ballgame. Now, when we talked about the employment effects of construction, it's about who constructs it. It's not about who runs it. And that's the debate we need to have. So even if you look at what happened even during the bad old PPP days, you had large companies who would take on these projects, but the construction would be done by a whole bunch of small companies. That was the story. And we really need to keep those two apart. At the moment, we are getting fixated about large chunks of our infrastructure, which is now run by very few corporates. I mean, I think that there is a worry there, but it's a worry of a different order. But in terms of what the sort of position that Virala was putting construction in the story, I think the question is somewhere else.
So I'm not completely sure I understand so I understand this distinction between who, the construction bit and who's running it. Now, right now, at least the conceptualization of who's building airports and who's building ports and so that's construction.
Yeah.
And seemingly they're also going to be the ones who are going to be running. So there's not a whole lot of
no,
we don't know where
we do know. I mean, for instance, on airports, it's given to one large conglomerate, right? That conglomerate may or may not have a construction component to it. Without taking names, there's one which does have the construction capabilities, but in most of the other cases, the construction is actually subcontracted for just the construction part of the activity. And so what the concessionaire is doing is essentially becoming the agent for the government. It does the contracting and then it runs as a company. So that's what.
So okay, let me put it in more stark terms. Do you think this is a better model of infrastructure finance than the PPP version, or where the government just completely tries to finance this out of its own tax revenues, does the whole thing?
It does. No, the question is that what is your expectation about the payback period, right? Now, take for instance an airport. If you have a situation where the traffic load is so high already that if you have an airport, you're going to have traffic moving there automatically, immediately, it may be relatively short run. But if you take a highway, and if you expect that that highway is suddenly going to get a huge amount of traffic over and above what the local road was carrying, you're wrong. It's not going to happen. It's going to happen only as and when people realize that this is actually cost effective for them to use this highway rather than anything else. The question is who bears the cost over that period of time, right? And it depends upon the nature of the infrastructure and what the payback possibilities look like. And it will vary from project to project.
Okay,
So
so
if I could just add a little
sure.
bit on that, Martha. So my sense is, we are still going through the expansion phase of this cycle of national champions
Right.
getting the management or the construction of these assets. I think we have to wait for a downturn to know whether this has worked out well or not. And I think it all comes down to the question of whether, as you said, the banks or the LICs and the other companies that are giving them financing, whether they did their project finance calculations right to give them money. Did they design the contracts with reasonable roadblocks along the way to see progress and then disperse the money? I think the concern I have with the national champion model is actually I'm concerned about concentration, but I'm actually less worried about concentration than I'm about the fact that if they are seen as national champions, they will be perceived by this capital allocating institutions as basically too big to fail. And I think they're going to just disperse them the money when the project thing comes through. So I don't know if that is terribly different from someone picking up the phone and telling a public sector bank, lend XYZ money to this infrastructure project, then the government allocating the right to a private sector company that's seen as too big to fail, and therefore the bank saying, okay, I'll give you the money left, right, and center. So I think it's a question mark. It's clearly a shift in the model, as you point out, but we have to wait for a more serious downturn to know whether the bank allocation or LIC and other insurance company allocation of funds has been judicious or not, I think.
Yeah.
Just wanted to add one more dimension to the infrastructure jobs conversation. There's no question we need the highways, we need the ports, we need the airports. I'm not sure we need the mega bullet trains, but whatever, we need all of this. And while we were building in the 2000s, started the process of building the infrastructure, we were also building a large amount of rural infrastructure. Yes. PMGSY, one of the biggest success stories that we don't talk about enough. NREGA created a certain amount of infrastructure. National Health Mission created, Sarva Shiksha Abhiyan created school infrastructure, health centers. So we built a lot in rural India. Where we did not invest is in the small towns. And increasingly, rural areas started morphing into census towns. Again, we need data to have a better understanding of it, but these transitions have taken place. This infrastructure building is crucial. It's crucial because this is what will, I think, enable that farm to non-farm transition. This is where the costs of living also are going up significantly, because as you start getting population density, you start making, for example, septic tanks, which is creating all kinds of other diseases because of water contamination and so on and so forth. I mean, garbage. There's a whole set of infrastructure that is actually employment heavy in the short run. That is crucial because really the energy for growth is going to come from there. It will make it more viable for small firms, family-run firms to move, at least in some trajectory, towards becoming larger. We talk a lot about factor market reforms, but we do not talk about this. And I think this is at the heart of the challenge that needs to be brought in, and it's crucial to the conversation on infrastructure. So when you have budgetary constraints, you need to generate jobs. We're putting it all into big capex, which has gestation periods, which take a long, which also tend to be heavily mechanized as well. It will not generate the kind of jobs you need. What could possibly generate the kind of jobs with relatively less infrastructure is small town infrastructure and the operation and maintenance, which my colleague Partha Mukhopadhyay keeps reminding us of all the assets that have been created over the last 20 years, which I think is something where, at least in the short run, that's where I'd bet my money on.
Yeah, I agree. Okay, so there's one other thing I want to talk about, and then I'll throw it open to everybody. Yeah, so to the floor. So one other thing that has been hanging over, I think pretty much most of the world has been worrying about climate change for a long time. Now, what has happened in response to the Ukraine war and this sudden sort of energy, susceptibility of the West, we kind of are seeing old fossil fuel-based things coming back online. Are we kind of looking at a point, because the whole thing was trying to get there was this awareness about the need to kind of wean ourselves off that in order to address this climate change stuff. But the tone was being set by the West. Now, is this going to be a huge thing rippling down all over, that we've been set back in our fight against climate change, and this may be a long-term problem? Viral, I know you've been thinking about some of these issues.
Yeah, yes and no. I think that there is still a fear in the Western fossil fuel companies that the transition risk of regulation is very much on the table. That even if there are some temporary relief measures along the way, that there will be a transition that's taking place. Europe is going about it more through a carbon tax. USA is going about it more through a subsidy for innovation in alternative forms of energy. But I think the transition is taking place. I think large fossil fuel firms realize this. And therefore, I think what I find interesting about this climate transition is that whether it is for the current generation or future generation, at least in the short to medium term, it is a bit stagflationary as a macroeconomic phenomenon, because it means that you are not creating enough capacity along the way, because you are trying to actually phase out these old style assets. There's no clarity of when the new style assets will reach a capacity and storage that's good enough to actually substitute for them. And then along the way, you get some shocks, and you can see that they can be very, very inflationary. And I think that it's something we have to contend with, it's my sense, because if you look at the other side of it, the physical risk side of it, which is of course related to carbon emissions as well, but I think there it's almost present. I think I no longer think this is about future generations. I think this is very much an issue about the present generation. If you look at temperatures, if you look at forest fires, if you look at droughts, hurricanes, flooding, I think depending upon which geography is affected by what, I think everywhere you are seeing a huge impact of this. And I think now the costs can be calculated, and I think climate scientists are calculating them. You can calculate the energy expenditure costs. You can calculate the loss of productivity of high-risk industries like construction, mining, agriculture, and so on. There are parts of US which are now making rules to not have workers be required to perform more than X number of hours per week if temperature exceeds 100 Fahrenheit, for example, on X number of days in a month and things like that. Now this is, and then even low-risk industries have some loss of productivity because, if energy expenditures become very high to just sit in the office, you will probably have to bring down the employment hours anyway. So I haven't seen as many studies on India in terms of quantifying these costs. I'm very curious to see if climate scientists get down to doing it, because I think two things I see very clearly in the data for India on just climate data is, one is, of course, the temperatures, which is just rising across board everywhere. And I think there is a very clear pattern in the climate data that north and northeast, so sort of leaving aside the sort of southwest, that actually drought conditions are there every summer. The level of water storage is not that great at the peak of the summer temperatures. Of course, as long, we've had a spate of really good monsoons, and so immediately the reservoir level gets built up. But therefore, if you just take snapshots at the peak of the summer of Northeast India, the water level doesn't look actually very, very good. Groundwater level. And so I would love to understand through some climate science style studies, what is the energy expenditure costs, what is the labor productivity impact by different types of industries in more heat exposed versus less heat exposed, more drought exposed versus less drought exposed. And I think this has huge implications for the kind of stuff we were talking about. If manufacturing is coming to India, where should these be set up? I think this is a very big decision, I think, that we have to undertake. If we are developing infrastructure, where should we be developing it? Do we need to create more in urbanized places like Delhi and Mumbai? Or do we need to actually identify pockets of India which are maybe going to be more livable in future and perhaps develop infrastructure there? Because ideally we want, so I think there are some big questions on the table, but I think it's worth beginning to think about them, because I don't really know if we can say that our focus is only on the short-term growth, because it seems to me it is now about us. It's not about the future generation anymore, I think.
Okay, so on that note, I'll throw this open. We have, I think, about 15 minutes for questions. So, Devraj.
Should I use the mic? Or?
I think we have these transient mics which are floating around.
Thanks. I really found that fascinating. And I had a question for maybe Yamini, but the others should also chime in. This is about the agricultural reversal. And I wanted to get a sense of whether from the CMIE data, we can get a sense of how much reversal, because the reversal started a bit before COVID, I guess. So around 2017, maybe going up to. Can we get a sense of what percentage of this reversal is due to just the flight of migrants back? Because then we can get some measure of how much of this is happening because of demand-driven, or just that the migrants went back and created the reversal. So do you have a sense of the numbers there?
So the PLFS captured this from, if I'm not wrong, 2019-20. So some of it would have been predating March 2020. And it has continued in the remainder of the two rounds. And CMI also seems to show it's moved a little. The extent of the reversal deepened in the peak lockdown, but it's still very much there.
Well,
I don't know.
Let me give you a rough. The total increase in agricultural employment is just under 50 million. Okay? Whatever estimates that we have of reverse migration.
What period, Dr. Over what period?
1920
From
onwards.
2017.
2017.
Yeah. The reverse migration, there is no hard data on it, but the maximum numbers that we have heard up to now is about 20 million. So 30 million is organic. That is people who are in rural areas and not being able to get non-agricultural jobs. Ashwini?
It's linked to the question of rural absence of rural non-farm employment, and I think one dimension is the women's labor force participation rate, which didn't feature in the discussions. And if you look at the 1920 PLFS, you actually see an uptick in FLFE, which is a little bit, it's a statistical artifact more than anything else, because it's really unpaid work on agriculture on farms rather than gainful employment in rural areas. And so I think that on the question of whether people work on agriculture because agriculture is subsidized, or whether they work in agriculture because there are no other jobs. And I think one good test case is female labor force participation, which is the proportion of women in agriculture has declined, but agriculture still continues to be the biggest employer of women in rural India. And that's because really, other than frontline health workers, teachers, it's agriculture. I mean, there is really not much else to do other than a little bit construction, which is sporadic. So I think that feature of the absence of productive employment in rural India, non-farm, is important. And on the question, you mentioned that point about skilling, and that's obviously a very important point. But I'm at Ashoka University, which is in Sonipat, so technically not that far from Delhi. And I run this center called SIDA, but we have really tough time recruiting skilled people for SIDA because they just wouldn't travel from Delhi to Sonipat. So it raises in my mind the question of how segmented the labor market is, and what needs to be done to break this segmentation that people can actually travel, are willing to travel to a distance to Sonipat to take up employment.
Yeah, I had one sort of small thought on this, which I haven't written about, but it keeps going through my mind, and maybe someday one should, maybe I should do something about it. Is, I have this thing that why don't we create some incentives for companies, the formal companies, which are large, etc., to make certain activities to increase the women labor force participation as a part of CSR. Give them a CSR credit for it, Let them save money. Let them save money for doing this.
Just starting a big project working with corporate, the private corporate sector, and we're piloting solutions about what can employers do to increase women's participation in the labor force.
Very interesting.
But a lot of that is also about, so, Nilanjan Sirkar's surveys also pointed to this safety and transportation, two huge disincentives for women looking for work. Public transportation. I mean, the fact that you don't have good, safe public transportation, there is a reason why it's electorally quite a attractive proposition to say free bus rides for women. So, you do have to think about this in a more systematic way about how urban infrastructure is also being built out, no?
No, but let me also bring out one other dimension. The whole issue of skills is possibly the most under-researched part of what we do in India. If you look at the formal skilling system in the country, across trades, it's pathetic at best. It's a very, very, very small portion of what we need. But it's not the skills are not being built. There are people who are developing skills. The question that you have to ask is, where and how is this happening? And is there a gender bias that creeps in automatically? And the answer is that by and large, skill formation is something that happens in the informal, then in the MSME sector, and only then does it get to the formal sectors that you represent. The point is there a barrier to entry for women in each of these skilling processes? And my submission is, I think there is. Yeah, go ahead.
I'm just coming from the CPR session where we're talking about the confluence between policy and politics. And here we are talking about public model of health and education. Yamini raised the question about how even if public model of health is working, it is not reaching to the public. So the people, sorry. So the question as a political science student is that, is there a tool outside the idea of public model that politics can use, where we can bring the people to the public model? Right now, I observe that there is a growing divergence between public and the people, where people don't seem to value the public model of education or health. As someone from public university, people don't seem to value the idea of public university. They see it as wastage of taxpayer money or something that is not coming out of it. So is there a strategy that politics can make use of to bring people to the public, for cultural strategies or something like that to bring them to the public?
So maybe this is kind of closely related to what Yamini was saying earlier, that you sort of have a demonstration effect of something that works. Maybe you want to sort of take a stab at this. Yeah.
But I think the point Yamini made, correct me if I'm wrong, what you said is that when push came to shove, people moved back to the public system. And the moment the crisis went away, they moved back to the private. Why?
Yeah.
Why is it that if in a situation where there is a crisis happening, people want to actually shift out of private? And I suspect because they realize that they're going to get gouged.
So my experience also from where I live now is that it's ultimately about the quality of the public schools. So if you provide a good public system, people are very happy to use it. They are just making a choice at the end of the day whether the private school gives a better option versus a public school. And we have gone through it ourselves. Our son went to a private school first in New York because we wanted him to be in a diverse setting. So he went to the United Nations school, etc. But New York has these pockets of excellence in the public schools at the upper end, for STEM education and things like that. And our son is in one of them. And actually now that we have experienced what this school can deliver, we think in hindsight, actually, perhaps just going through the public school system might have been perfectly all right. So, and I think a little bit of the work of Raj Chetty recently with my colleagues Johannes Strobel and Theresa Kuchler also gets at this. Of course, that's a US specific evidence. But they are actually showing that having good public schools in neighborhoods has such huge impacts on income and wealth inequality down the line, is because you get this mingling of the relatively well-off families with the not so well-off families. It completely changes the diversity mix of these children. It completely changes their self-image. It changes their confidence. It changes their aspirations and ambitions. And they find that these have long-run effects on what colleges, etc., they are ending up in. So I feel that ultimately, if we are spending money on these, like say, education infrastructure, I think building it to be of good quality might be the best thing we can do, because then people will automatically select into it because it delivers. And therefore, for all its lack of immediate payoffs, I always thought IITs were a good investment, because ultimately you produce something of really, really high quality. And, now we have other ways of building other IITs. Okay, maybe not everyone is at the same level, but some of the IITs are actually, the new IITs are also coming out to be quite good. Like 3-4 of them are doing very well, even as new educational institutions.
Let me take
Take a step. Okay, no.
Nilima is the education expert.
We'll come to both you guys. So why don't you go, and then we'll take 2 questions at a time, and then we can go.
You mentioned about, reining in subsidies and so on. And correct me if I'm wrong, all three of you, but to my mind, the defining characteristic of political economy in the last 5 to 10 years in India is being the private provision, the public provision of private goods. And given how that is meshed with electoral politics and how it has percolated down from the center to the state level, combining it with the cult of personalities and so on, I don't see any way of putting the genie back in the bottle unless there is a genuine fiscal crisis. So I don't know. And I know Yami has written a lot about this also. So
Let's also take, you want to, Willima?
Okay, just to add to what Debraj and Ashwini was saying, we're not really talking about.
It's on.
Just bring it closer.
But the big elephant in the room, right? We've talked about how the IT sector in India is doing really well. We've talked about migrants going back, but there is this intrinsic mismatch, right? There's all this talk about the demographic dividend. Well, the demographic dividend to people want jobs, but they should be jobs for the skills. There has to be a matching of the skills. Now, one of the years that we did, Asar, in your years, we looked at youth, 14 to 18 years old. I mean, those are the very, so they are not children anymore because right to education ends at 14, and they're not quite adults because that starts at 18. But, major decisions in their lives are made during that period. And youth after youth that we talked. So this is just rural. They have aspirations, the standard aspirations. They want a government job. They want to go to college. They don't clearly want to be like their parents. They say that they've done everything that they were asked to do because most of them have completed class 8, because that's what's happened after right to education. Those numbers have doubled. And there is this great sense of betrayal because there's nothing at the end of this. They've done, over and over that I did everything. They don't have any role models, and they don't know what to do. And, this is a ticking bomb because the aspirations are there, the skills, I can see it, right? But I can't get it. There is all this talk about India shining. Well, there is India shining and then there is the rest of India.
Yeah.
And that has just not caught up.
But would you have a response to that?
So I think that's at the heart of the issue, right? We are talking about, so let's think about it in a long arc, right? We invested in higher education, particularly in technical education in the 50s and 60s, and built out these wonderful institutions that basically propel the service-led growth. As the 1990s story of higher education in India is actually a very depressing story in terms of the institutional capability of education. School education starts expanding. So you start moving into mass education that always brings with it, there's an expansion and then there's a challenge of quality at the school education level. The higher education institutions, particularly in the social sciences and others, for a whole host of complicated reasons, start atrophying. But you really still only have a service-led economy. So you're not actually investing where you needed to for the rest of the economy to catch up as the top layer of the economy was beginning to create all of that growth. That's all coming to roost. We just some early indications from a youth survey some colleagues and us are doing in one big IT state is telling us that the one skill everybody wants to get after having finished engineering college, some of them, is IT skills. Those are the only jobs and possibilities that people are seeing. And it begs the question, how do you talk about skilling when you still haven't been able to ensure that 50% of children that finish 5 years of schooling can read a standard 2 text? I don't know that there is anything in history that tells you can skill without doing this foundational stuff, right? The good news is that we finally acknowledge the foundational issue and we are moving closely in that direction. To the larger point about the politics and the political economy, look, I mean, there's lots of things to cry about our politics. So we'll talk about that separately. But there are some intriguing things that are happening. It is true that this sort of new welfareism, the public provisioning of private goods, and all the complex political economy around it is creating us into this lock-in of a certain kind of welfare state. But if you look at it comparatively, I don't think yet. Actually, our welfare expenditure, I'm not talking about subsidies, our welfare expenditure, it's not that high relative to most other countries. China, Brazil, everybody is spending a lot more. So actually, there's scope to be spending more. It's a question of how you do it in a more cohesive and sensible way. And that's where there is a little bit of hope. I think the fact that there is a Delhi model that is suddenly creating curiosity in different parts of the country is interesting. That model is, whatever may be the truth about it, but that model is about education and health. So there are possibilities that are emerging, but politics is complex. There are many reasons why, I mean, our democracy is in a complicated place. There are many reasons why voters are making the kinds of choices there, but I do think there's an opportunity for us as a community, for the public elite, particularly, all of whom have exited from the public system because it has been so broken, to also try and rebuild a narrative of enchantment about the possibility of what the public system can offer. I do find it puzzling that whenever I particularly talk to the bureaucracy, that I, as an outsider to the state, am more convinced of the possibility of the state providing decent health and education than anybody inside the state is. They are always looking for public-private partnerships. So let's see what works. We have enough evidence that things are actually working, or at least anecdotal evidence. Maybe we should get more surveys out there and actually build up from there. The discourse has to shift.
Yeah, if I could just add one point on the politics of this whole sort of welfareism is, so I kind of agree, and I also agree that, of course, the recent stuff is not that large. It couldn't have been very large because we are not getting rid of anything else. We are mostly sort of adding stuff. So I thought that the ambition of 2003 FRBM Act, etc., was very good. It was meant for macro stability, but I think it also likely had other collateral benefit possibilities that you would be forced to rationalize your expenditures if you are held to meaningful targets. I've been very disappointed that we have, as a system, not actually held these sort of the spenders accountable to those targets. The targets are being missed. We are very happy if deficit is off the balance sheet more than 10%. Okay, now even if someone says it's 6.5% target next year, we are very happy. We have completely forgotten those FRBM targets of 2003. And this is not to say that in a year of crisis, you don't spend more and then retrench. But we have shifted off to an altogether different level. And what that means is that the rationalization of expenditures that should have happened to create space for infrastructure, health, education has simply not happened. And I think, I don't know if we need a fiscal crisis. Maybe that's a natural way for these things to get readjusted. But I personally think that the system doesn't hold the officials, be it in the government, sometimes at the central bank, accountable to the acts which are being passed. I have the same issue with inflation targeting, for example, which is, I'll just give it as an example, which is that, okay, fine, we had to deviate from 4%. But I think the response of the system is very weak in holding the central bank accountable to what the mandated target in the act is. So either the target is wrong, in which case you rewrite the act. Now, if you can't do that, then it means probably you want to deliver 4%, but not. But I think, to me, the bigger error on this front has been the FRBM targets. I think they've just been kicked off, and there is no reversal in sight, in my view. But I think that is one way to rationalize expenditures, I think.
So we're kind of running short of time. I'm just going to take 3 more questions. We're going to run. So why don't you go first, and then we'll go. Can we have the mic over here? There's, I don't know where it is. Oh, go ahead. Yeah.
Yeah. So, sir, my question is, spoke a lot about migration and reverse migration of labor happening. So, I remember a stat I read, I think, a few months back, where it said Tier 2, Tier 3 cities have seen boom in IT companies going there. And also e-commerce sales, they've overtaken the Tier 1 cities. In addition to that, startups have also increased by a large number in Tier 2, Tier 3 cities. So and one of the reasons perceived in the article was the more talented, skilled individuals present in those cities and who are attracted to these jobs. So the corporate elites themselves see and profit investing in those cities. So doesn't this indicate, it's a question, so doesn't this indicate an ad hoc reversal of trend in the migration pattern and not a permanent one? But also it's an opportunity that COVID-19 gave the companies to open up there. Though this trend might be limited to the technology sector, as you rightly pointed out, it is the sector that's booming. So this is my question.
Let's take another question here. There are two more hands up. So we'll take those 2 and then.
Yeah, so my name is Vanchit and I'm pursuing a master's in public policy and governance from TIS Hyderabad. So my question is for Ms. Yamini that, ma'am, as per your point of view, what suggestion will you give to a budding entrepreneur who's wishing to start his own think tank first? Second, from your experience, what will you suggest to bring about sustainability in the same? That's it.
Go ahead.
Okay, thank you. So just listening to this conversation, I was thinking of a couple of solution suggestions to try and reverse the reversals in agriculture, for instance. So I think one relatively low-hanging fruit would be to develop the tourism sector in the country. And so there is a strong infrastructure component to that, and it's obviously relatively low-skilled than getting people to get IT jobs. And then once the infrastructure is out of the way, there is the whole maintenance and the whole ecosystem that is created. And that can, kind of absorb people out of agriculture who are relatively less skilled. And, given the fact that, there's a lot of cultural heritage in the country, and of course, religious tourism is a big thing. So I think this is something we could develop even beyond the G20 presidency. The other sort of suggestion would be to build infrastructure to facilitate and incentivize e-mobility. So this is something like what China did during COVID, in fact, also. But this is again, and this kills 2 birds with 1 stone because it also helps our climate change targets.
Rohini, you had a question too.
I just had a comment on the female labor force participation debate and Yamini's point about health and education. Something I found surprising recently is that you find this declining female labor force participation with the ILO data, and everyone is talking about this. If you look at a panel like the IHDS, there's no change.
There's no.
Partly that, but partly what is interesting there is that if you actually look at exits and entrance into the labor force, because you have the panel, you can do that. You find that if you have a kid or you increase the number of kids, you get out of the labor force. So that's a positive probability. And if a kid actually exits, so they finish school and exit, then you increase the probability of going out on the labor market. So this is just focusing on the supply rather than just the demand, which we've been talking about. But it links to what you're saying on health and education, because my guess is if you actually had Anganwadis functioning well, and if you had the school system functioning for the right number of hours and childcare offered, then I think that would be a big deal in terms of offering options for work. So there is a supply side issue here, which is related to investments in health and education.
So Yamini, why don't you start off with the think tank?
No, I wonder, and I've been chatting with Rukmini Banerjee about this also, is now that you have probably a large cohort of women who have finished 8 years of schooling, whose children are entering the schooling system, what are the kinds of choices they will be making in terms of workforce participation in that period while their children are in school? Because the school system across the world, and India in particular, does rely a lot on household input. So, I mean, this could be a positive in terms of the next generation learning outcomes, but I wonder what impact this will have on the supply, precisely as...
About prices.
Yeah.
What's happening is that people who've just done class 8 and they're not getting paid a lot on the labor market will say, look, let's invest in our
Exactly,
and what
exactly.
If you're looking at graduates, they're going back out on the labor market because they're getting enough there.
Yeah.
Then hire help or get parental help or whatever.
Yeah.
So
it's going to be a very dynamic and interesting thing. On the think tanks, I'm trying to think. Well, it's a very difficult regulatory environment, and therefore that means that you'll have to have a lot of good legal understanding and a lot of good understanding about taxation and chartered accountancy, etc., to be able to navigate that complexity. And if you find answers to some of those regulatory challenges, do share, because it does tend to occupy an enormous amount of time. Having said that, I do not want to dissuade you at all. I think we need a lot more thinkers, a lot more spaces for dialogue, deliberation, new thinking, fresh thinking, old thinking, building up of research, building up of ideas that can contribute into the public sphere. There is a whole new cohort of public policy professionals. I think that there's a lot of thinking that we need to do collectively as a community of what role we play, because we're not inside the state, but we engage with the state sometimes to the risk of hollowing out the state. I've been writing and thinking about this question of consultants and people from the outside that come in and work with the state and what impact that has. But there's also a really urgent need for a lot more rigorous policy, expertise, dialogue, debate, and contribution into discussion, particularly at the state level. So if you do want to be brave enough to start a think tank, I would encourage you very much. But I would urge you not to do it in Delhi, not to do it in Bangalore, not to do it in maybe Bombay, I don't know, but we'll get more about that. But do it in state capitals, in the smaller town, where really there's a lot more that needs to be done. And maybe one thing that you can do when state budgets come out, so when the Government of India budget comes out every year, even though there's very little bit of room for maneuver in the budget, it creates an entire marketplace for all of us public policy professional types as one day in the world in the year when suddenly you have an op-ed to write, and television will call you, and we all feel very important, but we're commenting in the air. None of this happens at the state budget level, which is actually the real budget that impacts the everyday life of people. So I would say go to Patna, set up a nice budget tracking institution.
Already there.
Okay, fine.
So go to another state capital.
Go to another state capital, and I will help you if you need. But first figure out that regulatory story and let me know.
Viral, you wanted to have a...
Yeah, actually, I just wanted to add a little bit again on the theme Rohini mentioned, which is that I think so it's like you can really think of 3 points, which is how do you get more women first into the better paying jobs? That requires some skilling part. Then how do you make it attractive for companies to hire them? Because, a part of the problem that happens all over is that once you give longer maternity leaves, etc., companies are not actually keen to hire certain age group of women because they don't want to have breaks in the jobs and so on. So you need to somehow incentivize them to do that in spite of the breaks that are going to happen. And then, as you said, how do you then keep them in the jobs even if they have the natural life events? And there, that is about the daycare or the crashes, and then, you know, the quality of the schools. My sense is all of these three, the skilling, the maternity leave expenditures, and crashes and expenditures on local schools, I think we should allow companies to account for them in CSR. In my view, you should just allow them to book these expenses. Of course, you'll have to figure out how to account for these things in a meaningful way. But I think right now, we are not incentivizing the formal sector at all, actually, to bring women in, skill them, keep them, make it easy for them to remain on job. Maybe work from home helps a little bit, but that's for both genders, you know. So I don't think on the margin it's really any.
It's not CSR, it should just be labor law.
Yeah, but it's just a way of giving it back to them, whether you want to call it CSR or you want to.
The informal economy, which is a bigger employer, is really the bigger. I mean, to me, that's the most critical.
I think we're kind of running out of time, so I'll just say one thing to William. You know, when you were talking about aspirational betrayals, we have found a way of the modern opium, which is almost free data. That takes the edge off.
Yeah.
From when I see people, that's the youth seem to be just on perpetual data-based distractions. Anyway, I mean, that's way of maintaining
the biggest thing post-COVID rural India, young boys hanging around in villages, which is a rarity, all on their phones looking at YouTube.
Yeah, that's our modern opium. Anyway, I think it's we have to bring this to a close. Thank you so much to all three of you for wonderful. And thank you everybody for coming to the event and coming to, you know, this was a very special occasion for Ideas for India in general. And so I thank you all and for a lovely, lovely evening, and have a pleasant night. Thank you.
I guess my question
Thank you all of you. Thank you, panelists, and also the moderator. Thanks all of you for coming. One last thing, we have some token gifts, which our staff will give to the panelists. Thank you. See you again next year.